You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
If you're not buying now, then when are you going to buy? I mean, everything's being thrown out the window here. I mean, quality junior babies are being thrown out with a lifestyle junior bathwater. Their fundamentals don't matter. Gold in the ground doesn't matter. Companies that have multi-millions of ounces in the ground are, giving no value for these things because the market obviously thinks that the gold price is going to go down to $1,350, $1,400 and stay there.
Thanks for tuning in to Mining Stock Education. I am your host, Bill Powers, speaking today with my friend David Erfle from JuniorMinerJunkiewithAY.com. David, welcome back on the show. It's been a little over a month. And from your perspective, do people still not care about what you and I care a lot about, these junior mining stocks that we're heavily invested in? Is there any foreseeable turn that you see in the near term?
Yeah, thanks again for having me on, Bill. Always great to talk with you each month. Yeah, we're getting down to the nitty gritty here. You're seeing positive divergences between the miners and silver against gold. We had silver make a low, and then we had gold break 1675 and go lower, and silver did not follow. So when you see relative strength in miners and silver, that's always a positive sign. But even though you're seeing these positive divergences between the miners and silver and gold, the juniors continue to be sold for tax loss with capitulation selling. You're seeing bonanza grade results coming out of some of these juniors, and the press release is just used as a liquidity event to sell the stock. Because it's that time of year, where tax loss selling is going on here. And I know a lot of people have not made, most people have not made a lot of money in anything this year, unless you were in, heavily weighted in oil and gas. And a lot of investors that are heavily weighted in oil and gas do have investments in juniors that they're selling for tax loss. And also when you have someone like Eric Sprott come out and say, we saw recently where Pure Gold is basically filing for bankruptcy, and he's going to take $100 million loss, Eric Sprott personally. He basically said, yeah, well, I hope it's $200 million. I could use the tax loss. So, when you hear comments like that, we got more tax loss selling coming up in these stocks and these juniors, and you never know when it's going to end. On each particular company, each particular company will stop selling off when the last person sells for tax loss, and you just never know when that is. But as far as the GDXJ is concerned, it's really interesting how it's kind of following the model of 2018. We're in mid 2016, where we had that huge run up from the major low in late 2015. It topped at the same month that our peak in August of 2020 peaked. It was in August, and the GDXJ sold down for 26 months and made an indecision candle on the 26th month, which is September, and it happened again this time. I'm not saying history is going to repeat, but if you take a look at the index, it's carving out a rounded bottom while showing relative strength to the gold price. So that's very constructive. But we got a Fed meeting coming up tomorrow, and anything could happen. On what the Fed is going to say. It's priced in that they're going to raise another 75 basis points. But what's not priced in is what they're going to do in December. It was leaning 50-50, whether they were going to go 75 or 50 in December. Now it's leaning towards 50. You take a look at the stock market, it continues to climb ahead of this meeting as everybody's expecting the Fed to hint pivot, right? So it's going to be interesting to see how the market reacts to what's going on tomorrow, and the gold price, 1675, which was a solid, strong floor for so long, has now become a strong ceiling. So 1675 is strong resistance now, and 1620, where it double bottomed, that's support right now. So if it loses that support, then I wouldn't be surprised to see gold eventually sell down to 50, which is a 50% retracement from the doubling of the gold price from late 2015 to 2020. So that's a very real possibility. But if you take a look at what's going on in the miners, they, like I said, they're carving out these bottoms, and they're showing this relative strength. So that is very constructive. But as far as juniors are concerned, I've got a 25% cash position that I'm hoping to see some better bargains into December.
Dave, for silver, do you think we've seen a bottom in silver, or could that also sell down if gold sells down?
Oh, it could absolutely sell down, but yes, I mean it's showing a stronger bottoming pattern than the gold, because it's showing relative strength to gold. And when you have, the metals sell down this much for this long, and then you have silver showing a relative strength to gold. The silver and the miners basically trade in tandem against gold, historically. So when gold is in an up leg and it's showing signs of peaking, you see silver and the miners start to sell off. And then when you see a long consolidation correction like we've seen right now for a little over 2 years, when you start to see relative strength in the miners and silver relative to the gold price, and that's usually a sign that it's about to turn.
Dave, you're invested in Visla Silver, and you did a site tour and you did a write-up for Kitco. Now, that's an underground silver mine. We've had a lot of failures this year, Arcana Silver, Pure Gold Mining most recently. Underground mining is a lot tougher than open pit mining, okay? It's a lot more complex. We all know that. And labor intensive relative to the ore you pull out. So why did you go for this underground mine, considering in this market, underground mining generally is more difficult?
Well, I mean, in some of the veins, the widths are narrow, but they've got a Copala vein where the widths are up to 10, 12 meters, and the silver equivalent grade is up to 2,000 grams. So, and I really like the project. As far as their aggressive approach to exploration, but first their aggressive approach to tie up the entire district beforehand. They're kind of following the Silvercrest Las Chispas model, where they, a huge district is tied up, and you aggressively drill it when you have these bonanza grade results, and follow them up. And it's a huge district scale size land package. And they're finding these bonanza grades all over the place in these three main veins, and they just keep making all these discoveries. And they're, like I said, they're taking this aggressive approach. They heard that they had an aggressive drill program out of the gate for first phase, and they came out with a 100 million ounce silver equivalent maiden resource, and they're about to release another one, which. An updated resource, which management feels could be up to 70% larger, added on to the resource. And then they're in talks of raising more money to do a phase 3 aggressive program, and then wrap up that program with another mineral resource estimate that would go into a PEA. So they're already expecting a 20 million ounce per year project. And there's 2 power lines on the project. They will have to build a substation to get that much power, but it's all doable. They have all these working agreements with the local people, the ejidos there, and there's skilled labor, in a town that we drove right through to get to the project. It's an hour from Mazatlan, which is, has an international airport, a deep sea port. So, it's got a lot of things going for it. So I really like the project, and I like it.
We saw the United States government issue sanctions against Nicaragua, which affected your investment in Calibre, and you sold that. Can you talk us through the rationale of selling it? And as you do that, something I've been thinking through as a speculator, we invest or we speculate based on probabilities. So an investment thesis could be solid, but you never know what's going to happen, right? Nobody knows the future. So do you consider this a failed investment, or how would you describe what happened here?
Yeah, I mean, this is why we never put so much, too much money into one company. It's always good to have a basket of these things. I don't care how good it looks on paper. And Calibre was doing everything right. They're making gobs of money in Nicaragua. They bought out Fiore to diversify their jurisdiction risk with a fantastic project in Nevada that they're producing also. And funny thing is I was about to go on a site visit there when this news came over the wire. And, this is why, first of all, why I get up very early in the morning. And the first thing I do is scour the news. I'm constantly looking at the news, especially in an environment like this where something could trip up any of your investments. Because Nicaragua is kind of a risky jurisdiction. So, and I knew this, but the company does such a great job of building a growth-oriented producer without any debt. They've got 92 million cash. They got no debt. They're doing really well at these operations. They got a great working relationship with the government. This came just right out of left field. So, like I said, when I'm on top of these things, I can get this news out to my subscribers and say, look, we got to sell this right now. And the reason why we have to sell this right now is because, the Canadian government might end up, putting the same sanctions, because these sanctions specifically targeted the gold mining industry. Number one, that's a huge red flag, even if you're Canadian. So, and the next thing is I'm a U.S. investor, and like 65% of my subscriber base are U.S. investors. So, what's to stop the U.S. government from saying, "Hey, you can't invest in this company because they're going against our sanctions, our gold mining sanctions. So, you're banned from trading this stock." That's a very real possibility. And with so much value out there in other companies right now, I don't want to hold anything that has any kind of red flag whatsoever, in jurisdictional wise or anything. I mean, there's so many juniors out there that are so undervalued that are in top tier jurisdictions that you don't have to worry about something like this. That, hey, I'd rather sell the stock. Fortunately for me, I purchased it, quite a long time ago, and I still had some gains in it. So, I didn't lose anything. I know some of my subscribers did, and that's unfortunate. But I got the sell alert out as soon as I possibly could, and I've got a handful of thank you emails from subscribers for me doing that. But this is why you just have to be on top of everything in these companies. You have to constantly have a communication pipeline to management. If you're a newsletter writer, that affords you that luxury, because they're going to answer your emails right away, and they're going to get you the answers to your questions as soon as possible, because they know that you have a subscriber base that's invested in their stock. So since I'm afforded this luxury, I take advantage of it. And this is why when things like this happen, you have to be on top of it from the get-go.
Did you criticize yourself at all? Is there anything you could have done differently on that one?
Absolutely. I mean, Nicaragua was basically in line with they're in line with Russia. So that's what this is all about. Ortega's not doing anything he hasn't been doing for the past several years. This is all about Russia and its gold. So that's what I believe. I should have saw this coming. Absolutely. That's on me.
What about Brazil? What are your sentiment to Brazil? They look like they're in the middle of a civil war, disputing over who actually won the election. But the far left guy who recently out of jail, I guess, is in control here. Do you think that'll affect the gold industry in Brazil? Well,
it's too soon to tell. I've got one company that I'm invested in that's in Brazil. It's a fantastic jurisdiction in Brazil. It's not in the Amazon. There's, gold mines around it. There's infrastructure. There's access to skilled labor. I mean, it's a very high grade project. They're close to issuing a feasibility study. It's got low capex, and it's got everything going for it. And of course, the stock is trading at a ridiculous undervaluation, like most of these other juniors. And I'm down on it, of course, but I don't see any reason to sell it yet. But I am gonna reach out to management and talk to them. Once we find out more about who's actually going to be president. I know he's not accepting the defeat right now, and the truckers are starting to picket, and the people are starting to riot, and it's getting kind of ugly. But the same thing could very well happen here in a week. Because I don't expect any side to accept the result of the U.S. election either. So, we could have the same thing break out as what happened the last time 2 years ago when Biden won the election. So, there's political risk everywhere. There's jurisdictional risk everywhere, even, top tier jurisdictions. The first thing I look at is, do the people in that jurisdiction want mine? That's the big one for me. In the case of Calibra, yes, the people wanted it. These sanctions came out of left field. I wasn't expecting it, but should I have seen it coming? I should have been more vigilant and possibly seeing it coming. I can say that.
Dave, when it comes to management salaries for pre-revenue junior explorers or developers, are there any rule of thumbs that you can give my listeners for evaluating what is considered a reasonable salary? So, for example, I've been thinking this through myself, and for me, if it's a reputable person, not a newbie, $30,000 a month, anything above that, I'm going to start to really look at and say, is this guy really worth more than $30,000 a month? Because most people don't even make $30,000 a month. That is kind of like one line in the sand that I've been utilizing in my head. Do you have anything like that?
Yeah, absolutely. Especially if it's early stage. If this is a discovery play, you want as much of that money going into the ground as possible. I understand they're making a little more money when they're de-risking something, and they're dealing with capital markets, and they're dealing with hiring the proper, construction team and things like that. I can understand them being paid more money, but as far as an early stage explorer is concerned, absolutely, you don't want to see them making $200,000, $300,000 a year. Because you want to see them make that discovery, first. And then, once they start to find a deposit and then start risking it, obviously, they should be paying themselves more money at that stage. But yeah, you got to watch these companies that raise $5-10 million, and they have a drill program, a decent sized drill program, but they're also paying themselves a lot of money. Then you're saying, okay, some of this money should be going into the ground. Absolutely.
Some of the companies you invested in that you currently hold in your portfolio, are some of those executives lowering their salaries considering the market conditions?
That's rare. It would be nice to see, but I haven't seen that happen. I saw that happen in one that I ended up having to sell, where basically the entire executive team wasn't getting any salary. When I found that out, and I found out how much cash they were down to, okay, we need to sell this stock and take the tax loss, because these are red flags. And this is why you constantly keep in touch with these management teams and ask these questions.
What about the gold producers, some of which are paying a 5% dividend? If we believe gold is going up, would it be better to just buy a gold producer that's going to at least pay you to wait? What's your take on that right now?
Well, I understand where you're coming from. I know a company like Newmont, who just came out with their results today, and they weren't sold aggressively like their Q2 results were, but they're still paying that 5% dividend. But as they said in the release, and they said in other financial statements, that it's based on $1,800 gold. So if the gold price doesn't get back up to $1,800, they're going to have to cut that dividend. So, just because these mining companies are paying large dividends right now doesn't mean they're going to be paying them, in the immediate future if the gold price remains below $1,800. So we need to get that gold price back up there for these companies to maintain these dividends, and for you to get, like you say, get paid to wait.
Last question, Dave. When you're looking at a developer with an economic study, if the economic study has been done, let's say in the last 3 to 4 months, do you consider that data reliable In other words, with where we're at with inflation, do you think inflation has subsided enough to where the data they put out in a feasibility study can be considered reliable?
That's a great question, because what you want to do is you want to ask these management teams, how much of these costs are fixed? Do you have contracts for fixed costs? And a lot of these companies do. They've learned the lessons from previous companies committing these sins. Like Argonaut and I Am Gold and Ascot. They came out with these capexes that continue to just go higher. Because they didn't fix any of their costs, and they just like Jerome Powell, they didn't properly factor in inflation. So that's why these questions you need to ask. I mean, as far if the study came out 3-4 months ago, it's fine if they fixed a lot of these costs. And it also depends on where you're constructing the mine. A company like Orezone, which I'm a shareholder in, they fixed a lot of those costs. They were able to construct that mine on time, under budget, during COVID, during supply issues, during lockdowns, and all that, because of where they were constructing it, and they had the forethought to fix a lot of those costs. So it all depends. That question is that's why when you do your due diligence and you talk to these companies, you ask these questions. Sure, that CapEx looks great, but what is there any pitfalls that I have to worry about as far as inflation is concerned? Have you fixed any of those costs?
And Dave, when you're looking at a developer or even an earlier stage project, what weighting in your assessment is a third party, let's say firm, or a fund that invests, but they have geologists and engineers on their staff that evaluates these investments? If an institution such as that is invested in one of these companies, does that add weight to you, or what impact does that have on your decision making to invest?
Well, that's another question.
Do you rely on their opinion or just yours? Because neither you or me are engineers, right? So,
well, you definitely want to see. That's one of the first things I ask too. Is who owns your stock? Because a lot of these companies, they don't even put the ownership percentages of who owns their stock on their presentation. They just say, this is the share structure. This is how much cash we have. Blah blah blah. But they don't have any ownership information. So, you want to find out who owns the stock. And if you can, a lot of times they can tell you, they know how much they paid for it. How much did these institutions pay for it? When did they come in? Do they have warrants? What's their time horizon? Because a lot of these companies, like Waterton or, some of these other institutions, they're just in it for a trade. So, you need to ask these questions of management. Sure, it looks good that institution A has a good sized position. Are they adding? That's another thing. I'm constantly scouring INK to see, insider trades, who bought what, who sold what, especially right now, because today's November 1st. Yesterday, October 31st, you saw a handful of juniors have these huge volume spikes at the end of the day, right? And that was a fund selling for tax loss at the end of the day at month-end book square. Usually, that's usually what took place. So, get on the horn to management. You find out, okay, did you know who sold? And in one case, I saw that management took advantage of it and they bought shares. They took some of those shares. So that's what you want to see right now. You want to see, if you're looking to bottom feed some of these fishing lines, you want to make darn sure that management is still aligned with you. And if they're buying decent sized blocks of shares on the way down as well, then that's a great sign.
And Dave, do you like management being in the know of who's selling off their stock? Because I've talked to CEOs and they're like, Bill, I think I know who it is, but I have to do a little more investigation. And I kind of like that, where the guy knows
Absolutely.
who he brought into the stock and who's exiting the stock.
Absolutely. I've been in companies that they knew 95% of the shareholders, right? Or 90% of the shareholders. They knew the shareholders. You know, that could also be a red flag. That means like there's maybe not enough retail liquidity for the stock. So there's a fine line. You want to see a tight share structure, but you want to see, you know, you don't want to see too much retail flow, but you want to see enough to where retail can get in. So yeah, it's, you know, there's so many things that you have to look at in these things, you know. I mean, that's why I love this sector so much. It's such a challenge. You know, if you can make money in this sector, then that's really saying something, especially in challenging times like this, because I mean, if you're not buying now, then when are you going to buy? I mean, it's, you know, I mean, everything's being thrown out the window here. I mean, you know, quality junior babies are being thrown out with a lifestyle junior bathwater. Like it, you know, their fundamentals don't matter. You know, gold in the ground doesn't matter. You know, companies that have multi-millions of ounces in the ground are, you know, giving no value for these things, because the market obviously thinks that the gold price is going to go down to $1,350, $1,400 and stay there. Because that's where the GDXJ and GDX are basically trading at. The last time they were down at these levels, gold was at $1,350, $1,400.
Well said, Dave. That's the opportunity. You offer a teaching service, not just a stock picking service.
Absolutely.
And I'm sure you have openings, right, due to sentiment in the market right now.
Plenty of room, Bill. Yes, plenty of room.
You cap it at 500 people. And the website again is juniorminerjunkiewithay.com. Dave, thanks for the monthly check-in, and I'll be speaking to you again in about 30 days.
Always a pleasure. Thanks a lot, Bill. Look forward to it.